Good morning. Today is, what is today? Today's Tuesday, August 12th for the free video today. And as you can see right in here, I got short the E-Minis pretty much where it closed yesterday. So look, we gapped lower. So we closed at 1932 and a half yesterday right here, opened up lower, and I put on a short trade one tick below where it closed at 1932 and a quarter. So I'm short at 1932 and a quarter. The market right now is trading slightly below the 50 exponential moving average. As you can see, the bars are red. The trend is down. I'm expecting this market to hit some type of resistance in here and then start heading a little bit lower. So we'll see. I'm going to pause it. All right, I am back. The market's definitely gone further than I thought. I definitely thought we would have gotten a reaction down in here, so I am wrong on that trade. So what I intend to do is buy it down at 34 even. Let's put a buy at 34. So I'm going to stop and reverse at 34. I'm going to go long. We've got what I like to call an opening drive to the upside, and I think we're going to go higher. So I'm going to exit this position at 34 even, and I'm going to look to get long. All right, let's go. Right there, 34, right there. Out of the current, into a new position to the long side. Let me pause this video real. All right, I am back. So let's see. First position was a losing trade, okay? We went short here. Stopped ourselves out right here. Went long here and here. Okay, so I am looking for this market to bounce now to retest the high of the day. Even though the market has come down a little more than I had thought, I thought we would have gotten more of a bounce to the upside after getting that opening drive to the upside. But again, we're long here, we're long here, and we're waiting for this market to bounce. So I'm going to pause the video again. I'll be back shortly. All right, I'm back again. Again, just to update you, markets right now trade at 1933 and a quarter. We're getting that bounce. So again, right now, long here and here, looking for a bounce at least halfway back. Now, if you recall, we were down on that first position. We lost $875, but immediately came back. We noticed, remember, we got to be flexible and dynamic. So look, I was wrong on this position, just like the one last week. Remember last week I was down about $1,600 and I immediately reversed my thinking process to the other side and got that back and made a few thousand. So again, this is what I'm doing. I was wrong. Instantly noticed that I was wrong, exited, and then reversed because I believe that the market's moving higher now. Okay, so let's see. All right, so what I'm going to do here is I want to see exactly where. I don't want to be greedy on this. I want to just be smart about this. And that, okay, so basically my average price is right down in here where I'm moving my cursor. This is the high of the day. We're moving up nicely. So I honestly, I want to sell into strength here. And look at this. So I am long 30. So I need to exit 30, right? Just watch this. Okay, we've got a nice big up bar there. Place a market order, right? To sell 30. Here we go, folks. Here we go. We're going to sell it. And
order
there you go. So look at what we just did. Everything that we've done this morning, what have we done? We are flat right now. And what did we close out? $625. So on this first position right here, short right in here, exited the position here. Okay, so that was the loss. Okay, notice that I was wrong. Look, at the market went up higher than I thought. Right, it definitely shot up through. I thought that the market at this point was going to come back down at least halfway back for a quick profit there. Okay, the prior day's close almost always acts as support or resistance. In this case, since the market opened up lower today, the close was here. There's a few point difference. You could almost get a snapback at the prior day's close, okay, especially in an established downtrend. Look at the bars are red. Market's trading below the 50 and the 200, trading down, opens below the 200, rallies back, snaps back to that close, I was wrong. Market continued moving higher. I noticed I was wrong. Then immediately I exited, stopped and reversed right in here. Market came down to the 50. Okay, so look at this, is getting a little confusing here, right? So what happened was we got what we like to call an opening drive, right, from low to high, but we didn't know that as it was happening. It opened up here, put in the order to sell it. Notice I was wrong as it moved up to here, exited and went long right in here. Drew my fib retracements from the low of the day to the high, and at the 50%, I doubled up right in here and then got out at the market here. Again, that first trade, I believe I was down about $1,100, right? Down about $1,100, and then traded out of that position and closed today so far with $625. So I'm up $625, and that was starting off on the wrong foot, being down about $1,000 or $1,100. So again, this is another lesson that you can't get distraught over losing trades. It can't. If that immobilizes you in any way, then you probably shouldn't be day trading. You need to be able to come back fresh as if nothing happened, right? So, and that's exactly what I did here. So right now, there is some indecision, okay? I thought, again, opened up lower, put in a low here, ran up. I was wrong about this direction, but then I got it right here. Bought it here, got a nice snapback and got out there. But right now, I mean, we've got a range here of, let's see, the high of the day is 1935.5, the low of the day is 28 and a quarter. So we've got about a 7-point range. Not until this market gives me direction in terms of taking out the high of today or low of the day, if there's indecision in here. So there shouldn't be any trading in here, okay? So hopefully you learned something, and I'll be back with you tomorrow morning. Have a profitable day.